Hello, hello. How is everyone doing this morning? We got a rate hike out of the Bank of England. We'll be checking out pound and its reaction. We got some new outlooks in the Discord. We'll be going over a few of these. Check that one out. Panic or Panacea, the economic impact of artificial intelligence. A whole bunch. You got a PhD in there. You got senior economists. You got 3 senior economists and a PhD on this article. Yeesh. That's quite a bit of work, huh? Well, guys, go ahead and say hi. Leave your money bags in the chat. Leave a like, all the good stuff. And let's get on into the charts. I was taking a quick look here at Aussie yen for a moment. Let's go on over to our pound. And you can see here, we did not get our positive yield spread expectation. But we did get to a very likely low here for the week. Around 80% of the time, your low for the week comes in right around these levels here. The yield spreads, though, are quite negative, even on the announcement. But man, look at that candle. That's a lot of buying into that candle still. Although these yield spreads are still very short-term negative, you can see how the yield spread started to get a little positive. A long was attempted. But man, was that a good risk-managed long trade? Because instead of holding the drawdown for 93 pips, it was only held for about 25, and then that is what you call proper risk management, not holding down to these drawdowns. So now if you wanted to do another trade like that, you could do so maybe with a little less risk, a little more defined of a stop, right? You could do all sorts of cool stuff with this. So if you guys have any particular requests for me to go over as far as charts go, we'll be looking at our daily probabilities. I am still working on getting 1.1 update of range probabilities out to people who are in the get access to all the indicators that I show here on the stream. So that's seasonal forecasts, pivot probabilities, range probabilities, these yield spreads, yield differential indicators for all these FX charts, all this good stuff. Wow, check that out. So these are our daily range probabilities. And look at where we bottomed out. Right here. Right here. It's like 80% of the time your low for a given day comes in above this line. Otherwise, you're talking about going down right there. And check that out. There's your 5% probability, 5% of your lows for a given day come in below that line. You can see there's like this little bump in your distribution for where your lows occur. Isn't that cool? Hi guys, hey Philios. Pound dollar is great point to buy it at. Yeah, this was, I mean, now is an okay spot. I mean, if you want to do a day trade in all seriousness, but the best time to get in was looking at this indicator on a daily time frame and then going, well, setting range probabilities to a daily resolution, then going to like a 1 or a 2 hour chart and catching this buy, because you could have done a setup like that, putting your stop just below, see where the probabilities fall off a cliff and they get really dull, like they're way below 2% around here. You can just put your stop right there at that threshold, get your long somewhere around here, and try and just do a hold till the end of the day into the likely close, which probably will be above this line. Most of the trades hit the stop losses and go up, but as hedge profit is the winner. Gotcha, yeah. People are always confused, like, Joe, why'd you take this trade? Why'd you take that trade? It's like, guys, I'm up like 200 pips on USD CAD, right? If I'm up 200 pips, like I literally got in 2 pips off the low using this methodology of trading, using, you know, pivot probabilities and range probabilities, using these probabilistic indicators. You know, this is not the first time or the last time I've done these sorts of trades. Like, I can point out that actually back on USD CAD, way over day, maybe I can pull it up on this chart, USD CAD. I can pull up the drawing that I snatched. Where is it? Yeah. If I get these 2 drawings, I paste them, guys, yeah, this is from a different chart where I do a lot of my trades. This is my daily plan chart layout on TradingView. I have another layout where I do like more advanced charting for guys in the trade group and for myself. You know, because sometimes I just want to make things presentable for you guys here on the stream, so I have a different chart layout for all my personal stuff. But I was going over this trade here in the trade group, and this was yeah, that was great. Not the first time, not the last time that I've done these sorts of things before. Have we topped out for the day here on USD CAD? Maybe. I'd like to think we're probably more likely to have bottomed out. Maybe we go a little bit higher. Just a little bit higher. So maybe it's an up, down, up sort of day. I am by no means a bull on risk assets. If we go to the ES, because we're starting to get earnings coming around, guys, look at what happened. Just look how they massacred my boy. Yeah, isn't it nice? You guys can actually see yourselves in the chat. Hey, Bill, nice to see you. Yeah. Also, maybe I'll put you guys in like the top corner here. Like that. That way it's a little easier for you guys to see. Yeah, something like that maybe. That way you can see like the top part of the watch list. And the sound thing doesn't get in the way of you guys. Hello, Patrick. Nice to see you. Hey, James. Yeah, it's nice having the chat on the stream. Okay. But yeah, this has been horrid. The expectation, this orange line, is the weekly survey that I do. So everyone from the survey was bullish. At least net bullish, I think. If I go back to the survey, let's see here, Discord. And there we go. Let's go ahead and find S&P. Yeah, see, you guys were sort of bullish on it. Not super bullish. A couple of you guys were like, it's going to go down. And that one guy is just... whoever put in this 1 on the survey is feeling like a king at the moment. Or queen, you know. Yeah, And hopefully whoever put in that 9 did some good risk management, right? So let's look at this and let's determine, actually maybe for the week, where we should be doing our risk management on the S&P, because it looks like this thing has successfully pulled back. Hey, it pulled back to this area I was expecting to go to last week. Oh, it's almost like it's going to the most likely area where you were expected to see your low for the week during a bearish week. Oh, yeah, right there at the, yeah, so it, it might be a decent time to buy now going into the end of the week. But how would you risk manage this? Well, if you go long there, you're putting your stop roughly around here, around the 44.8. So unless you want to have close to a 50-point stop on this, so then you can maybe make some money into the end of the week. This is just not a good idea, in my opinion. For the rest of the reward that you got set up, I'm not a huge fan of this. I'd probably wait until more of the earnings season was over. Let's see here. Headlines: Wall Street futures slip as Treasury yields hit 9-month high. Stock index futures slip on pressure from rising bond yields. Apple and Amazon earnings on tap. S&P, NASDAQ, Dow futures slip as yields. It's all freaking yields. So what's going on with the yields? Let's go to, let's see, where are my yields? Here's the US 10-year. You can actually see in the watch list when I bring it up here. Right here at the top right of the screen, you can see the US 2-year yield, the US 10-year yield. Yeah, this looks like a very bullish chart. And so people are like, why is the dollar going up so much against all these other currencies? Well, when you actually go to these other currencies and you compare the 1-year, the 2-year, the 3-year, when you compare all the yield durations from Europe against the respective yields in the United States, see all this red? This means that the yields in the United States are appreciating faster than the yields in Europe. And this puts pressure on the exchange rates for currencies, because as institutions need to get exposure to these rising yields, they need to move money from one currency to another to get exposure to whichever country has the rising yield. So you can see that from today to yesterday, or today to 7 days ago, that's what all these bars down here show. They show the different lags of the yields. So it compares it to 25 days ago, 7 days ago, 2 days ago, and today. And today is this little red line that you can hardly see that's way down here at the bottom. So compared to right now, to all those different lags of where these yield differentials were, they started getting bearish up here. And this is where we started getting bearish on these daily plan streams. And people were like, oh, this could go to 114. And I'm reading outlooks saying, oh, this could go to 114. And I'm like, yeah, it could if the yield differentials actually hold up. But right now is not the most opportune time, it seems like. Back over here, that looks pretty straightforward, right? You had a whole period right here where the yield differential started to get more positive for the euro before this huge pop-off occurred. It missed this little bit, right? But most of the move was here. That's 200 pips, 250 pips. This whole area right here, you had some positive yield spread right there ahead of that move. Yield spreads have been a known leading indicator of foreign exchange rates for like the last 30, 40 years. And I think I'm the first person to visualize yield spreads in this fashion, at least in aggregating them into a color that you can just look at and know, oh, the yield spreads, across all these durations are getting positive, instead of looking at, this stuff down here. Sometimes it's not as clear, this indicator. It's not as clear where it's like, oh, there's just there's so much red here. Obviously, this FX chart is probably going to go down. Sometimes it's not so clear. Sometimes the longer dated yield differentials, so that's like the 7, the 10, the 20, and the 30. Sometimes these are green, and then the shorter term ones, the 5, the 3, the 2, and the 1, those are red. Sometimes there's a mismatch between duration. And those times can get quite confusing, in all seriousness. But during those scenarios, this indicator will color the bars white and say, hey, there's a transition going on here, or there's a bit of a mixed bag situation going on here. So you can, with this indicator, look at things very granularly at a duration by duration basis for every yield differential there is. Or you can look at it in aggregate by looking at the bar colors and saying, oh, is it green? Oh, is it red? And this is a better trend indicator than most trend indicators. Yeah. So I'm very happy with the result of this. It definitely can keep you into some good trades. So I have expectations that maybe we go a bit lower for this week. I am not sold that the US dollar rally is done. Like, even look at Great British Pound today. Here are the daily yield spreads for Great British Pound, and you can just clearly see, like, yeah, it's probably bottomed out in all seriousness for the week. The low for the week might be in, so there could be some trade here, actually, when you look at this distribution. But then when you look at the yield differentials and how negative they are, this is not a smart buy, because for all we know, the real risk is you go down to here, where there's the next highest zone where your probabilities are. So it's like, I don't know, guys. I don't know. That doesn't seem like the smartest idea in the world. And a big reason why this short dollar play doesn't seem too smart is mostly because disinflation that have been coming out over like the last few weeks that have been more definitive. And even today, I was getting outlooks sent to me over my email, in my research email, for, oh, we're going into more disinflationary times. US manufacturing is disinflating, in like, disinflation is going to be a very, very, very big thing for US dollar strength. So real quick, if I bring up the research for today, this ASB, this is just, I'm not even going to cover this. This is just, I was reading some stuff on commodities. This has a lot to do with New Zealand. Largest export out of New Zealand is whole milk powder. And so you can see global dairy trade auction results. And you can see, actually, this is an interesting. Milk price futures are just going down the drain. When disinflation rises, generally speaking, commodity prices kind of start going flat. And here's the Bank of England rate decision, increased to 25 basis points to 5.25%. Their next meeting is on the 21st. Let's see here. Do they mention anything about the 50 basis point rate hike? Look how fast I'm going through this stuff. Let's see here. Given the significant increase in bank rate since the start of this tightening cycle, the current monetary policy stance is restrictive. Okay. The MPC will ensure the bank rate is sufficiently restrictive for sufficiently long to return inflation to the 2% sustainability target in the medium term, in line with the remit. All right. And then this is meeting minutes. Meeting minutes. What's this? While UK weighted global growth had proven resilient, some slowing was evident. Yikes. Interest-sensitive components on demand, such as housing investment in the United States and housing and business investment in the Euro area, had shown weakness. Yeah, I'm getting some conflicting information from institutions where some groups are expecting better growth in some areas and worse growth in other areas, and it's just the growth outlook is very sector dependent right now, it seems. So let's go ahead, keep going. So this is a view on the Bank of Japan. There is still need for accommodative policy to ensure that price growth remains sustainable over the medium term. So this is where I get into what's going on with this inflation? What's going on with growth? So if we continue to get disinflation, it can hurt the positive growth outlooks that are being put in place now. If we get the positive growth outlooks, if we actually realize those positive growth outlooks, then it could keep central banks tighter for longer. So I think the next move is markets are going to move to try and realize the disinflation story and create misses on the growth story. So then central banks are going to more quickly realize the story of, oh, we've tightened, growth has fallen enough, we've reached our inflation target. We no longer have to have restrictive monetary policy. And ultimately, that's what businesses are going to try and achieve. So that then the central banks are no longer restrictive in their monetary policy. So don't be surprised if we see a continued move towards trying to ensure the lower inflation at the cost of growth. And this is Westpac simply saying, hey, the Bank of Japan might be putting some of its growth on the chopping block by letting these yields widen. So, I mean, literally, that's what it says right here. Evidence of the excess demand and associated price pressures within a developed nations are, at least for now, absent. Services inflation is still recovering. Yeah. I mean, you guys can read this. I posted this in the Discord. In here, under Outlooks. Yeah. A long way to go for Japan right there, under Outlook. And Westpac has actually sent me a few things this morning. We have lifted our growth forecast for 2023 and 2024. This is the chief economist, Bill Evans. Arguably one of the most powerful people in Australia. Let's see here. Oh man, these I'm looking at my trades here and things are going in an interesting direction. I'm seeing some of my dollar trades are doing some of my dollar longs are doing well, and some of my dollar shorts are also doing better than expected. That's what you want to see with your hedges, guys. That's what you want to see with your hedges. I mean, for all intents and purposes, let me get back to the charts. You guys can read this stuff on your own time. I've already gone through this, and this is more of an Australia-focused reading here. And if you're trading the Aussie dollar or Australian equities, this is reading this sorts of thing is good for your trading expectations relative for Australia. So let's head on over. Is it trading here? Let's actually go to AUD USD. And let's see. Negative yield spreads across the board. Most of those yield spreads, though, came over the last week. And we are at a likely low for the week. You can even see we bounced off this area here, huh? Yeah, look at that. Nice little bounce. I mean, even the yield differentials over the last 2 bars. So that means in the last 24 hours, because this is a 12-hour chart, this is showing that, hey, over the last 2 bars, so the last 24 hours, the yield differentials have slightly increased in the very, very shortest of terms. So net, you can clearly see this has been saying stay short. But right now you're at a likely low. You could go a bit lower. There's definitely a way to argue, yep, this is a good risk to reward. There's ways to argue no, because those negative yield differentials could take you down here another 60 some odd pips. So then you can say, just put my stop loss right there, right? And some people have concerns that these distributions are what's called stable. And by stable, it's just a statistical term that, you mean, yeah, like you see that right there, how the indicator updated and some of these probabilities shifted. Well, what you can do in this version of the indicator, I'm only simulating this data, this distribution with 3,000 samples, but you can put 10,000 in there or 20,000 in there. And it'll go ahead and simulate the distribution a lot more. The more samples you have, the more stable the distribution and the more reliable the probabilities will be. But sometimes it will take longer to load. That's it. So, yeah, now these probabilities really, they might shift a 100th of a probability, a 10th of a probability, like a 10th of a percent is like very, 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 very tiny movements. You'll have this will be very, very accurate. And at minimum, if you need like an exact probability, instead of a simulation, you can go ahead and look at these little orange lines. These little orange lines don't move. They will always be in the exact same spot. So you can type in any number here. What is it? Call it 30%. So where is 30% lie in this distribution? It's probably going to be somewhere around here, right? Yeah, just right there. I've kind of identified this area between 30 and 10 that I think is actually kind of interesting. Somewhere around the 20% probability, so you kind of make like a range between 30 and 10. Oh, wow, 10's like down there. Oh, that looks like an error. The 5 is above the 10. Yeah, that is interesting. That is interesting. Sorry, it doesn't work on every single shape, because you see how there's this huge drop-off right there? Yeah. Like 25%'s right around here. Yeah. So, yeah. This is still pretty darn low. I mean, that's kind of the point of having this distribution shape, so then you can actually look at it and come to like say, hey, you know, most of your lows are around here or here or here. And probably stopping out right here makes sense before you risk going down to the next highest probable zone down here. And sometimes figuring out the exact percentiles doesn't work exactly as planned, just because there's a funky shape. So always having the data, something to look at that you can audit with your eyes and see like, hey, that looks like a cutoff there where we could move lower. And these yield differentials are insanely positive for the United States dollar, negative for the Australian dollar. I don't know if this is a decent value here. I don't know. Same thing with the Great British Pound, right? Super negative yield differentials. We go ahead and load our low range probabilities. Yeah, it's like it's exactly the same scenario, right? 30% of the time, this is where 30% of your lows occur below this 30% line right there. So roughly around here, you'd find a decent number of your lows, but now you risk just falling down to the next most likely area. And look at that. There's like this little area between 10 and 5%, right? So you got this psych level in the way, you got this 26, right? But just because there's a psych level there doesn't mean that it's really that significant in the grand scheme of things, right? Because I mean, how many times have you guys seen price perfectly bounce off a psychological level, you know, a round number, in this case 126, that's the number I'm looking at here, 126. And how many times have you guys just seen it go straight through those psychological levels? It's like, how do you know when it dives through those psych levels and when it doesn't? Well, for me, it's mostly coincidence. Like, if it's at a high probability low, then okay, that's nice. If it's not, if it's in a very low probability spot, I'm like, well, maybe we end up dumping 100 pips past by the end of the week. Like, being able to at least see that there's the risk that you have this big jump right through the level can enlighten you to, like, hey, you know, there's a bit of risk there. There's a bit of risk in buying that psych level, huh? Doesn't look like the safest thing to do in the world, huh? Alrighty. Well, now's a good time for requests. In all seriousness, I've kind of gone over some of the charts and showed off some of my fancy tools here. I mean, what I can do is go back to the research, some of the new stuff. I have 2 videos from Westpac up here. Also, as a little news outlets out of New Zealand and Australia. And I got this: Westpac workers to strike over low pay. And I thought this would be interesting considering how much we read Westpac's institutional stuff. They're going on strike. There's like 800 people in New Zealand who work for Westpac that are going on strike because Westpac apparently isn't paying them a living wage. And I do this because it doesn't specify here what a living wage is. It's like, what are these guys negotiating for? Are they negotiating? What's the rate increase they're asking for? So I have no frame of reference as to what the demands are from this union. But the fact that starting next week, Westpac New Zealand is having hundreds of people strike due to demands from low pay, I mean, that's a lot of people who feel like they're not getting paid enough for their work. So that's just a bit of due diligence to bring up when it comes down to Westpac. Every now and again, whenever I cover outlooks from institutions, I always go ahead and I bring up when I find stuff like this, like Danske Bank had I go over some Danske Bank research, and Danske Bank had some fraud go on, and they had to fire those guys. And none of those guys wrote any of the institutional outlooks that we were reading. It's kind of interesting how when you read those institutional outlooks, it's like, oh, there's some bad news about that institution you're reading outlooks from. I'm like, yeah, but the bad people that are being mentioned aren't the ones actually writing the outlooks that I'm reading and sharing with you guys. Like, until those guys get called out, and even then, how can you judge a person's character explicitly based off of how they summarize economic information and give you their economic trading outlook? There's some people who I really personally have disagreements with, but I still follow them for their outlooks. So it's, you know, it's economic outlooks are kind of like a bit of an amoral thing. But you know what? If someone's just a disgusting human being, I'm not going to read their stuff or share their stuff, right? So you always want to keep an eye out on, you know, these sort of things, because you don't want to be supporting bad people. And this seems to be mostly the New Zealand office in Westpac. So, Westpac, New Zealand, yeah. Let's see here. Bradford said, that must start with people who live in those communities and work for Westpac, but are struggling to pay their rents and mortgages and eat properly at the moment. Okay, so Westpac is really underpaying people if they can't even pay their rent, mortgages, or eat properly. Really? That's a big problem. That's a big problem. So I'll be following up on this. They say further details on next week's strike actions will be provided in the coming days. So if you want this information, I'll be posting it. Actually, I'll post it right now in the Discord. Let's copy that link. And I'll put it in, I mean, I don't think I should put it in off topic. It's kind of important. I'll just put it in general. There you go. So if you want to subscribe to NPA Mag, go ahead, go there, and you can with what's going on. PAX strikes in New Zealand. And mentioned at the very, very beginning of the stream, look at all the people who are authors on this commentary. This is huge. Like, literally, you got a PhD in this authorship. I believe right here. Bryson, this first guy here, this is the PhD chief economist at Wells Fargo. And you can read the bios of all these people. You know, I really like Michael and Sarah's commentary. They're frequently on Bloomberg. They're frequently representing Wells Fargo on TV, and they seem like very nice people based off of, especially when Sarah gets on TV. She has sometimes, she presents very, very well the ideas behind the outlooks at Wells Fargo. I very, very much appreciate the professionalism behind how they present things and how they frame their outlooks. These are all very high quality researchers. I'm very, very happy that they write this stuff for us to read for free. Here, let me take off the jacket. It's getting hot in here. Yeah, don't sing the next lyric, Joe. Don't sing the next lyric in that one. But yeah, this is a whole breakdown just on the investment landscape for AI. And it's reading this sort of stuff that can really get you up to snuff and up to speed with what's going on in the industry, going on with the research. Just very, very straightforward. The effects of AI adoption on productivity could eventually be considerable. Let's see here. The McKinsey Global Institute estimated in 2012 that knowledge workers spend about 20% of their time searching for and gathering information. So you could save 20% of your time if an AI can just go out and grab information for you and let you get to your work. More recently, researchers who studied one company with more than 5,000 customer service agents found that the company increased issue resolution by 14% per hour when it employed AI in the issue resolution process, with the largest effects realized among the lowest skilled and least experienced workers. And that makes sense because right now AI is in a very early stage. You really have to give it somewhat simple prompts and simple solutions, and it can come up with some very creative solutions to help with very advanced problems at times, but it really does excel more with the simpler situations. I mean, trying to get AI to do proper programming stuff is like it's sometimes hell. Like, you ask it to program something and it sort of does it, but there's like 5 bugs in the program. And you can just keep asking it, like, hey, there's a problem here and there's a problem there. And it will keep revising itself so long you keep prompting it and telling it, oh, here's a problem, here's a problem. But if it just depends on what field you're working in and what application you're trying to build, because sometimes the AI has no frame of reference as to what you're trying to build. So if there's a lot of data and examples and, you know, written knowledge that's publicly available about what you're trying to get information on, and so long it's not super brand new, generally the AI will be able to help you with those tasks. But for example, this indicator, right? With this distribution indicator, no. That I tried to get ChatGPT to help me build this thing. It was worse than useless. It was practically leading me down rabbit holes that did not help at all, because the information that I used to build this particular indicator, it's not sampled at all by ChatGPT. It's new, obscure, and, you know, unless they're like really into stats stuff, it's not something. I mean, there's a lot of guys who have their PhDs in statistics and have still never heard of the methodology that I'm using here. But that's usually because they're working on other stuff. You go ahead and you mention this to them, let them Google search it, and within 5 minutes they you know, a PhD would know as much as I do, right? I don't try and think I have any special knowledge. Latest and the greatest stuff. And I so happened to look out on the band. So let's go ahead. S&P Global Market Research, week start to third quarter for China as PMI signals divert. See, this is kind of the headline that I was mentioning can be the big problem. The expectations for growth and the expectations for inflation are going in opposite directions, and one of them has got to give. Yeah. Mainland China economy losing growth momentum at the start of the third quarter. A renewed manufacturing downturn was accompanied by relatively subdued service sector growth, and that most likely was pushed more extreme by inflation. The overall inflation picture nonetheless remained subdued, which, combined with the sluggish demand picture and disappointing second quarter GDP numbers, will likely add to calls for further government stimulus. Oh boy, oh boy, oh boy. Well, if they get stimulus, that might be useful for Australia or New Zealand, depending on where that stimulus goes. If the stimulus goes to manufacturing, that would be good for Australia, because most of the manufacturing industry in China wants to get their raw materials from Australia. If it's a stimulus for the consumer side of the Chinese economy, then it's going to go more towards New Zealand. New Zealand will see more of a boom of that because New Zealand offers more services and food commodities. Again, the powdered milk. So where that stimulus comes and how it's directed when it comes in, I mean, just having that little bit of information is super helpful. Depending on where the stimulus in China goes, which country is more likely to see appreciation? Is it going to be Australia or New Zealand, and being able to just rationally break that down based off, oh, Australia gets a lot of raw materials. That'd be good if the stimulus goes to manufacturing. Oh, New Zealand does a lot of services and food. It'll be good for them if the stimulus goes to the consumers in China. Like, sometimes the answers to these things can be pretty straightforward. It just requires just, I don't know. It just can be a little bit straightforward. You just gotta know things about the world. You gotta know what's going on in New Zealand and what New Zealand usually likes to do as far as business goes with China, and vice versa with Australia. And the more you know about the world, the easier generally it is to come up with ideas for trading, because you'll know how exchange and where value is exchanged in the world, and where, in what quality, what quantity, in what context. Worldwide producer prices. Oh, that's just something there from S&P Global giving me their AI prompt saying, hey, do you want to talk to a robot? You want to talk to the robot? Worldwide producer prices. Deflation slows in July amid rising wage pressures. Hey, it's our friend Chris Williamson. Did he write this one too? Yeah, he did. Chris Williamson. The guy who's pretty much in charge of the PMIs. Okie doke. Let's see here. Yeah, that looks bad. That looks bad. Global manufacturing PMI costs and prices. No, that's costs and prices going down. That looks good. But the most recent data point shows an increase. It's just, in the larger grand scheme of things, it's a huge improvement, it seems. Okie doke. Factories cut prices at a slower rate. And this is it broken down by country. Wow, the Eurozone PMI output prices have they're below China now. Jeez. I bet some people are moving their production from China back to the Eurozone to take advantage of that. S&P Global PMI, drivers of higher manufacturing selling prices, labor costs, and labor costs. It's just the labor costs. I don't know about you guys, but that looks like labor costs is the reason why this thing is going higher. Let's keep going. Mixed price trend. Let's see here. Oh, this is a breakdown. Manufacturing PMI output price by country. Let's see here. So these countries here are growing. Canada, Australia are growing. New Zealand. I think I skipped New Zealand somewhere around here. Don't see it. Spain, Brazil. Yeah, those are bad. Bad. Okie doke. What's next? Oh, yeah. I thought this article was absolutely amazing. Amazing. If you want to know how to interpret what's actually going on in finance conversations when people start discussing the yield curve or the importance of yields, all this stuff, this is literally a very, very, very baseline written tutorial. It's very simply written for the layman. And this also in, I believe, like fundamental edu under the Discord. Yeah, right there. Under resources, fundamental. I think I put it also in the bonds trading chat for fun. So I highly recommend reading this. Highly recommend reading this if you do not know jack about yield curves. Like if you don't know how to interpret yield curves at all, this is the simplest, most basic, and actually it's a very good summary. It goes over the math, it goes over the reasoning, the expectations, the reason why these things move. It goes over exact, and then this is like the creme de la creme here. It goes ahead and breaks down, hey, this is good, this is bad, here are the reasons why. And it just keeps going and going and going. It's a fantastic, fantastic, fantastic article. Highly, highly, highly recommend reading this, especially if you're new to trading. This is a great piece on the 101s of interpreting just yield curves in general. A couple of extra boring company to dig 68 miles under Las Vegas. That's a neat little thing. And then Meta came out with this new open source for audio that can help make music and also generic audio. So VoiceBox, first generative AI model for speech to generalize across tasks, and then speech to text, text to speech for 1,100 plus languages, and then CM3 Leon, which is their application for AI music. And then this is a whole breakdown of how it works, some samples. So that is the prompt. And that's another prompt. And this is the generation. Is that correct? Wait, text prompt, text prompt. Oh, this is just based off of a text prompt. Oh, this is actually what the AI generated based off of a text prompt. So it told these guys said, hey, whistling with wind blowing. And the AI made that. You put in the prompt sirens and a humming engine approach and pass. That's what the AI generated. Pop dance track with catchy melodies, tropical percussions, and upbeat rhythms, perfect for the beach. I don't know. That sounds pretty good for it. I think AI music is doing a pretty good job right now, folks. Here, I'm gonna reload my chat. Oh, there you go. So my chat's been lagging. Can I look at Euro Yen, USD CAD, Euro Dollar? Yeah, sorry about that. So nice to see you, Trevin, Felios, Ricardo. Sorry about that, you guys. Sometimes the chat just hasn't been updating recently, and I'm not sure exactly why it hasn't been updating. But yeah, isn't this kind of cool? Earthy tones, environmentally conscious, ukulele infused, harmonic, breezy, easygoing, organic instrumentation, gentle grooves. that sounds pretty damn good. Wow. Music Gen was trained on roughly 400,000 recordings along with text descriptions and metadata, amounting to 200 to 20,000 hours of music owned by Meta or licensed specifically for this purpose. All right, so there's no legal question as to where the samples for this AI came from. Gotcha. Importance of open source, samples, samples, samples. That is cool. Cool. Okay, doke. Real quick, let me go ahead and go to the trading view. We're going to look at that Euro JPY request. So again, now if you want requests, now is a good time to share your requests. That looks bearish. And we have been bearish. We're currently up close to 100 pips on this trade. If I go ahead and I put this in, it's like, oh yeah, most of the time you top out roughly around here. If I go ahead and I load the range probabilities on a slightly shorter time horizon, yield spreads are all negative. Check that out. We'll probably make another low sometime next week. In all seriousness, I don't think we're gonna crash down another 170 pips. Although considering the volatility we've had recently, it's not out of the question. But it seems more reasonable, I don't know, that we'd see the follow through next week. Just based off of the pivot probability expectations that I have for next week. A lot of assets have pretty bearish probabilities for next week. So I'm not the most bearish. I'm still bearish this week, right? I'm still risk off this week, but it's just, long the yen, long the dollar. But I'm not totally sold on just going all in short, right? Let's go ahead and actually look at the USD, I think CAD. Yeah, USD CAD. So USD CAD still super positive yield spreads on a 12-hour. When we look at it here, super positive, except for the long-term yield differentials. All the short terms over the last 2 days, the last 7 days, yield differentials are like sky high right now. If we look at the probabilities, it seems like we're gonna go to 134. It absolutely looks like we're gonna go to 134 based off this distribution. The rest, I would be very surprised if we didn't go at least another 20 to 40 pips higher from the current price. However, now you have to determine, oh, Joe said this is going to go higher. It means I should trade. No, not financial advice. I'm interpreting a probability distribution, and that a probability distribution implies a probability that what I say doesn't happen. And I can tell you, oh, there's this X probability it doesn't happen, right? But just because something happens most of the time doesn't guarantee it's going to happen. So the next most logical thing to think through is, oh, Joe has some baseline expectation that this asset, dollar CAD, might go up another 20 to 40 pips because the next most likely probable thing to happen is you go up that 20, 40 pips. But if you're not long already, like I have been since literally the very bottom of the week, right? Looking at these lows, right? Buying those lows way down here at this peak in the distribution for where the lows occur for the week. It's like, we have a lot more uncertainty for where the top comes in usually compared to our certainty for where the lows come in. I mean, look at the spread here, right? So we have a bit more uncertainty as far as the spread goes here. But also now you got to determine, well, if you go long here, where do you put your stop? Well, there's no good place, I think, here to put your stop unless you were to go to the daily range probability distributions. So we can do that and figure out, oh, for just today, or oh, for just today and tomorrow, what would I do to go long for risk management purposes? Look, it's even then it's like, well, how much risk would you want to put on for a long trade here that might only go up for like 20 to 40 pips? You might be required to put on a stop for like 50, 60, 70 pips because the probability of you actually going lower is still decent, right? So you might be put in a situation like right now trying to go long might put you in a situation where you have an asymmetry in your trade setup where your take profit is anywhere between 20 and 40 pips, but your stop loss is like 50 to 70. And that doesn't make all too much sense to me for a long trade, right? You can argue, oh, I'll only put so small risk. It's just, I don't like doing those trades. I don't like saying those trades are a smart idea. Again, it's not financial advice. It's just, that's when you go and you read any study, any interpretation, just asking common sense, like, hey, if I have a trade that only wins 50, if I have like a coin flip situation, right? Heads or tails, 50-50, and you have the potential of losing more on tails than winning on heads. That's kind of the situation here. Even though it feels like a certainty that it'll go up there, it's just like it's not that great of a setup unless again you went to the daily range probabilities and broke it down and really tried to get your stop really, really tight and your take profit really, really tight. It's like, look, either you were already long this or maybe getting long this a day or two ago, or you're gonna stay on the sidelines maybe till there's another decent opportunity in the next week. Like, sorry, sure, the trade was 200 pips, but that 200 pips are for guys like me who got in a while ago. If you haven't got in yet, now the next thing you're looking for is, when do these yield spreads start getting more negative? So maybe I can take a short trade, right? When do these yield spreads start getting more negative? Are we topping out right now, right? You can't say with absolute certainty whether we're topping out right now or not. Euro USD, we can also do Euro USD. Again, super negative yield spreads, yield differentials, super negative yield differentials. Decent probability your top already came in for the week right here. And like I said at the beginning of the stream, it's not out of the question that you go to the next most likely low, but it's like, do you want to go buying this when those yield differentials are so negative? Literally, you could just go down to here, end out the week around 109, and at the open of next week, just keep going lower to the net to 108. Like, that's what we've been doing for the last 2 weeks. We've been going from 112 to 111, then 111 to 110. That was this week. Every week it's just been down 100 pips. 100 pips down this week, 100 pips down this week, 100 pips down this week. Who's to say we're not going to get another 100 pips down the next week? Unemployment at 227. Here, let me go ahead and bring up the calendar. Let's see here. U.S. non-farm productivity. That looks good. Jobless claims. I mean, it came in at forecast and it was a little higher, but it's not that huge of a deal. Yeah, it's kind of a big nothing. I mean, sure, euro dollar might go up another 30 pips, but that brings you to where? 1096? Like, how significant is that going to be for just a trade plan? Like, it's not the most likely thing that the low is in for the week right here. Those yield differentials are negative. I don't know. It's not the most great buying opportunity that I've ever seen before, right? These indicators and the way that I'm interpreting them does not look bullish. Does not look bullish at all. Alrighty, you guys. Well, I covered a lot of those outlooks, today. I'll see you guys in the Discord for sure after the stream is over for like 15 minutes, because I do have a meeting scheduled immediately after the stream. So if you want to hang out for like 5 or 10 minutes in the Discord, I'll be hanging out in the Discord for like 5 or 10 minutes. Let's see, what else? I don't see much else going on. You have global composite and global services PMIs coming out here. Anything else? ISM services, business activity. I mean, you'll get some. Oh, here's ISM services PMI. That'll be important. If that comes in the 52s or the 51s, that actually could make the US dollar insanely strong. Insanely strong. I mean, like, you're going to the 107s on euro dollar sometime this month, if that's the case. Let's actually look at the probability of that happening. Let's look at it for the month. Go ahead and slap in it for the month. That whole thing with the time frame that I just did, it'll be automated for you guys. You don't have to worry too much about that. Oh my god, look at that. 107 is right here. Yeah. Yeah. 109's definitely, like, actually, it's more like the upper handle of 108 is definitely in the cards. And looking at these yield differentials, it's definitely the 108s is definitely in the cards here. And then like the 107 handle is on the table if the US services manufacturing comes in at like 51. if services PMI actually comes in at 50 in the 51 handle, it is very disinflationary. Very disinflationary, which would make the US dollar very strong. Like, it would also probably make it'd probably make the yen stronger too, I think. I'm not too sure, actually. How would in that situation where services PMI surprises to the downside, how would that actually impact? Yeah. That'd be a good thing to talk about in the Discord. Alrighty, you guys. I think that's pretty much everything that I wanted to wrap up and discuss for the day. We did a lot of trade plans. We went over a lot of probability stuff with these indicators. Went over some of your requests. Went over quite a bit of outlooks. Went over some fun stuff too with the AI and the Las Vegas tunnel thing. So yeah. All the trades so far I got doing so far so good. And I'll see you guys over on the Discord. Remember to check out this global macro trading for idiot's article. It's really well written. It doesn't really it doesn't put you down at all. It just describes how to do yield curve analysis in plain English without all the financial jargon. So I appreciate all you guys for watching. And thank you everyone for leaving their likes, for subscribing. The channel keeps growing, the Discord keeps growing. And thank you guys so much for everything that we've been building here. Alrighty. I'll see you guys in a bit.